I have tested 100 different indicators and I share with you a lot of incredible results from this study in past videos. But I also found indicators which can be seriously dangerous for you and can seriously damage your trading account. And you need to be aware of those indicators and be careful when deploying them. So let me talk about those indicators today. Hi, my name is Thomas, also known as the Mr. Breakout. I'm a breakout trading specialist and an internationally recognized trading author. I've traveled the world trading breakout strategies, and on this channel I will teach you my own way of finding the right trading opportunities and making real money with breakout trading. Welcome back all the breakout trading fans and specialists. So first of all, a very quick reminder. In the previous episodes, what I did, I actually tested 100 different indicators and I share with you all the mind-blowing results with you in various different videos. I talked about very powerful smart money indicator. I talk about potentially the best trading indicator ever, and much more, which you can get in the previous videos again. And in the previous videos, I also described the entire process, how exactly I tested these 100 AI-generated indicators, what I used. I explained everything step by step. It was really a major study. Just to let you know, I'm now working on a similar study on indicators on crypto, and I'm going to release those very soon. So please don't forget to subscribe if you're into crypto trading, because the video will be released very soon. And now let's get back to our indicators. So the framework which I use, which I already explained in past videos, I basically generated 100 different ideas, trading indicators and the ideas used as filters with AI. And then I tested these on 3,500 breakout strategies. So 3,500 breakout trading strategies on E-mini Nasdaq. So this is for indexes. The study is for indexes. And basically all the 100 filters and 100 indicators, they were compared on a baseline, which is a strategy without an indicator, and then each indicator, how much would that particular strategy would be improved or not improved with the particular indicator or filter. And that gave us some very good aggregated results to understand which indicators work and which indicators do not work. Now I'm using Breakout OS, which is the platform analyzing all these results. And the key thing you need to understand here is we have something called uplift index, which tells us which indicator improves the best, the results improves the best in sample and which in out of sample. Okay, very important. We do not want to overfit. We do not want to over optimize. That's a very common danger. So that's why the study and the whole framework works with both in sample and out of sample data. And then you can also see various metrics and various different results showing you really what is truly robust indicator and what not. Again, we covered many of that in the previous videos, so don't forget to get back to them. Now, another very important thing is that what I did, I actually created different clusters of indicators. I created indicators on moving averages, oscillators, price action, trend indicators, volatility indicators, and volume indicators. That's quite important. We don't always just want to know which particular indicator is the best and we should use, but it's also about which cluster, right? And the cluster sometimes can be way more important than the indicator itself. So that's why I'm pretty much into clustering analysis. I do them a lot. I always cluster any information I can, and I'm always curious about cluster. And that's where actually we always have to start. So if we go to this analysis and we swap into filter cluster, we can see that the best indicators are volume based or moving average based for in sample, and for out of sample, volume based, moving average based, and price action based. Again, I talk about money flow index, which uses volume in one of the latest videos. Today I want to focus on the worst indicators, and the worst indicators are actually oscillators. Quite frankly, this surprised me. I did not expect oscillators to be so much behind, but if you have a look in sample, the worst one, oscillators, out of sample, the worst one, oscillators as well. And we're talking about 15 years of data. It's a lot of sample size, 3,500 strategies. So that's telling us something really important, at least for the E-mini indexes like E-mini S&P, Nasdaq, DJ, Russell. I would not use probably oscillators that much nowadays, especially seeing how much oscillators are not just, they're not improving the results, they're actually making them worse. That means that on general, the cluster of oscillators is giving you worse results, okay, worse results when you deploy oscillator filters as into your strategies. So that's one thing. And now, I was thinking about this quite a lot, and I think oscillators overall, I think my personal kind of take on this one is that oscillators overall are oversaturated. They're one of the most popular. I remember when I was starting with trading 20 years ago, everybody was talking about oscillators, like oscillators were the thing. So I think maybe oscillators, first of all, could be a little bit oversaturated, but also the fact that the volume showed the best and highest results across different metrics and across the total scores were the second one. That means that really a secondary information added to the open, high, low, close data always happens quite a lot. So if we have some standalone additional information, because volume is a standalone information, obviously that can gives us some additional edge. So maybe in the future I will also test some very unconventional indicators like commitment of traders or second data stream. I have some ideas on mind. Of course, I'll share them with you once I have them. Again, don't forget subscribe if you like analysis like this. And now let's now get back. Okay, so that's about the oscillators. Now, I was really curious which oscillators are the worst, and I want to go to the single study. And now, quite seriously, when I saw the result, I was not surprised that much. I'll explain why. And also, I would like to let you know these oscillators, it was on E-minis, on indexes, can be different for you. But one of these worst oscillators I'm not using myself, and I never actually did. So the worst oscillators actually in sample, the very worst were Keltner channels. And I don't know why, I'm not really, but that's volatility based or more, yeah, I don't know why AI just categorized it as volatility. I never had any success with Keltner channels. So anyway, I'm not so much, I'm more curious about the oscillators. So the worst oscillator in N-sample was actually fast stochastics and then RSI. Okay, so RSI and fast stochastics, the worst oscillator in sample, pretty much the fast stochastics. That's quite interesting already, quite an information already. Now the worst out of sample, okay, in worst out of sample, if we focus on oscillators, is again RSI, okay, relative strength index, and stochastic slow. And then somewhere here we also have stochastics fast. Wow, I did not expect that. Well, kind of, something yes, something not. I did not expect RSI to be among worst. I personally do use RSI and quite successfully. By the way, if you would like to know what are my very best indicators I'm using every day and I have a tremendous success with, I already compiled all of them for you completely for free, so you can get all my very, very best indicators here on the link below. It's completely for free, costs you nothing. It can literally double or triple your profits. So the link below. Now let's get back to this. So yeah, stochastics. Okay, so stochastics. the worst indicators. Now, why stochastics? And I have an opinion about that. So first of all, I've never, ever had success with stochastics before. I swear, there's not a single breakout strategy, and I have thousands of them, which would use stochastics. It just never ever worked for me. It didn't work for me 25 years ago as a discretionary trader. It's not been working the last 20 years for me as a systematic trader. For me, it never worked. I don't know why. Just something about stochastic never ever worked for me, period. But I think also one thing why actually stochastics could be one of the worst indicators to consider nowadays is again oversaturation. So I remember when I was starting as a discretionary trader, everybody was talking about stochastics. Everybody was like, you have to use stochastics. Stochastic is the best thing out there, blah, blah, blah. That's why I was really pushing myself hard to make it work. Never happened. I could not squeeze a penny out of stochastics. So I think, first of all, I think stochastics are overhyped. And then I also think that stochastics are oversaturated. It's been just used too much with traders because it was overhyped. Nothing I would use. Again, the indicators I'm using are completely different. The best indicators I'm using nowadays, again, please really seriously download this completely free list and applications with examples of my best ones, because you will be surprised, but never stochastics. So my conclusion of this entire study is that I'm not so sure about oscillators, okay? I still kind of think that oscillators, it depends. Some oscillators can be good. I do use RSI. I love RSI. I use it on multiple time frames. I just love it. It works for me. Stochastics never works for me. So I'm not fully aboard with the idea that oscillators are the worst one, but I'm fully on board with the idea that stochastics are not a good indicator. I think you should avoid it. I think it can really damage your account, because all my studies are showing it's actually making strategies worse, sometimes much worse than better. And I bet this will apply among all the markets, potentially strategies. And I think that if you avoid stochastics overall, nothing happens. But that's my conclusion, okay? So I'm a data-driven guy. I test everything. Of course, I share the most important data and outcomes with you. So again, if you like stuff like that, I'm currently working on crypto and some other analysis. Actually, you know what? Let me know what you would like me to analyze and share with you. I'm happy to do it, and I'll do it. But let me also show you. Let me also know yourself. What do you think about stochastics? What do you think about this study? Do you work with stochastics? What do you think about RSI? I'm curious to know. So anyway, please give us like if you like sharings like this. Much more is coming. I'm going to show more strategies. I'm going to show you more studies about indicators. I love indicators. That's a never-ending source of fantastic and fascinating stuff. Don't forget to click on the link below and get my very best indicators completely for free. It can really double or triple your profits, and I'm looking forward to hearing your feedbacks in the comments below. So that's all for today. Happy breakout trading, and see you in the next one. All you need are